All right, so today we are going to talk about the most important topic, which is Hardman loan. I'm going to explain to you guys how Hardman loan works and where you can find a lender to help you out to get the loan if you are looking to flip houses. I did get a Hardman loan when I flipped my first house, and my goal is, first of all, I want to have like kind of two-part on this video. The first part will just kind of explaining what's Hardman loan, how it works, benefit, advantages and disadvantages for it, and then the second part will be the entire process to really dig deep, like what's really going behind the scene once you get the loan, what's it require, everything like that. Because I feel like I've seen a lot of videos here on YouTube, and they explain about Hardman loans and Hardman lenders, but I don't think they go deep enough for you to really understand like what's really behind the scene, what goes really behind the scene. All right, so the first question will be what's Hardman lenders? People may just ask, what's Hardman lenders? How does it work, right? There's some people who knows who they are, and then they will be like, I will never use them because they're just too expensive. And there's some people that are like, what's Hardman lenders and how do they work and where can I find Hardman lenders? When somebody speak about loan to buy a house, the first thing comes to people's head is our traditional loans, right? Your FHA, your VA loans, that's the first thing people think about it whenever they're thinking about, your loan to buy a house, right? A Hardman loan is totally different than that. It's different, space, different rules, different requirements. It's totally different space if you think about it. And sometimes people may ask, so why can't I just use a normal traditional loan, to flip a house? There's a couple reasons why, and it's kind of impossible to do it. And I will go over to I think that I just have 3 reasons for me that I think it will make it impossible for you to flip houses with using a traditional loan. The first reason is slow. I mean, usually your normal traditional loan, it will take up between 30 to 45 days to close on a house. That's the first reason. It's just too slow. And sometimes most of these homeowners, whenever they go buy houses, they're trying to close quicker. They don't want to wait that long, because if they did, they could have just put the house on the market and try to sell on the market. And even if they're still on the market still, they want to close on the house a little bit quicker. Second, the house is in unlivable condition, right? Most of the houses that we'll be buying to flip them, usually they need some work. They may need a little bit work, they may need a lot of work, right? So if you go find houses that needs work, sometimes they won't be able to get approved by our normal traditional loans. So you need to be able to find other alternatives to be able to buy those houses. And the last reason is because sometimes you may need to grow your business, especially let's say flipping business. You need to grow the business. You need to start having 3, 4, 5, 10 flips going at once, 20 flips going at once. These traditional loans, they will never allow you to have multiple loans. They always want each person to have one loan at once. So if you're gonna have FHA once, like only at one time, we're gonna have one loan. So they will never allow you to give you like 2, 3 loans all at once to buy 2, 3, 4, 5 houses at once. That's another issue with your traditional loan if you're trying to flip houses. And this is where Hardman lenders come into play, right? The first thing, Hardman lenders, they can usually close as low as 7 to 14 days, which makes it quicker. And there's some of the homeowners, let's say if you are buying off market, they are willing to give a little bit discount when it comes to purchase the property if you are able to close quicker, which means that allows you to be able to get a better deals and make more profit when it's time for you to sell the house after fixing up. And another benefit is they usually don't care so much about the condition of the property. As long as the deal makes sense, they're most likely going to give you the money to flip the property. So they don't care if it's livable or unlivable condition. They'll still give you money as long as the deal makes sense. And on top of that, right, most of these Hardman loan lenders, they're not betting on you, but they're betting on the deal. They want to make sure that if you take this deal and let's say get to the point where you can't sell it or you're not able to pay back their loan, they can sell the deal and still be able to make their money back. That's the most important things. Your traditional banks, they usually require you to have a job, to have at least 2 years of income, and send them pay stubs and whatnot. But Hardman lenders is totally different. They don't ask all of those stuff. With all this good benefit when it comes to using Hardman lenders, there is some disadvantage when you're using these hardman lenders, right? Hardman loan can be very, very expensive. Sometimes they will charge you between 9 to 12% of interest rate, and also they will charge sometimes between 1 to 4%, 1 to 4 points of the loan. For people who don't understand what's the points, each 1 point is 1% of the loan. So if you get a loan for $100,000, then your point will be 1,000, and if you get 4 points, your points will be 4,000 if you're getting a loan for $100,000. So you have to be very, very careful whenever you're getting into trying to get a hardman loans. You have to make sure whenever you're running your numbers at the beginning, you have to include all these costs, include the points, the interest rate into your loan, into your numbers. So whenever it's time for you to sell the house, you don't lose your profit because you didn't count all these numbers whenever you're running your numbers at the beginning. All right, now hopefully I've explained what hardman loan is. Let me go deep into it and really explain what the process looks like to get a hardman loan, right? So the first thing is you need to find a lender, right? So you may be asking, okay, so where do I find lenders? If you just go on Google, search hardman loan near me, there'll be so many pop-up local businesses show you like how there's so many hardman lenders, and there's two type of hardman lenders, right? One, there's just your local one, and then one there's the nationwide. The nationwide a little bit usually give good deals or give good interest rates, but they are more strict when it comes to the required documents. And then there's local ones which they're a little bit flexible when it comes to requirements and stuff like that, but they have high interest rate and they have high cost when it comes to points as well. So you have to choose and see what works for you and what doesn't work for you. I can give an example. For me, I use a national one, which is one of the biggest lender. Even all the biggest real estate gurus that they have used this company. It's called Kiavi. It's a nationwide lending company. They lend nationwide. So if you want to use them, you can go try them. They do help first-time flippers too, because this was my first-time deal as well, and I was able to only pay down 10%. Most of the companies will charge you 20% if you want to put down payments, but for me, they only charge me 10%. So I think they're good, and I will use them again whenever I get my second deal, because they don't charge me that much money. I will tell you how much they charge me for the interest and everything like that down the road. But yeah, so Kiavi, that's what I use. All right, so now let's get into it, okay? Let's say you have got there, you have grind, you got a deal, and it makes sense. Let's say you saw on the market, or you get it from a wholesaler, or you get it from, you have direct connection with the seller, and you're trying to buy from them, and you really love it. And then you have obviously, try to find a lender that you want to work with, because I would say try to find a lender beforehand. Before you get a deal, try to find someone who you want to work with. Ask them their terms, ask what they require for down payments, interest rate, and stuff like that. That's what I did, and then go find a deal. So let's say you got a deal, you already have a lender online. You're gonna go send that deal to the lender. Okay, you're gonna give them the numbers that you think how much you're gonna purchase for, how much it will cost you to renovate the property, and then how much you're gonna sell it for. Right? Everything makes sense. You have to make sure now the number that you told the lenders at the beginning that will cost you to renovate the house match what you have on the scope of work. So let's say you told the lenders, hey, I'm thinking this house will cost me $50,000 to fix up. Okay, that's fine. Then make sure whenever you go to that lender, make sure whenever you send that scope of work, it shows $50,000 of work or less. If you do more, you just have to explain to him why, and he has to go back and underwrite the deal again, because now the numbers has changed, so it's more than what he thought. Okay, now let me go back a little bit. You need to have a business to get a loan with the hardman lenders. You need to have a business, meaning you need to have an LLC, okay? You need to have a business name. Usually they don't land on your personal name, they're gonna land on the business. So you need to go on whatever site you go on, based on your state, you need to go and file in the business. Make sure it's under the LLC and not you. And once you have the LLC, you need to go to the bank. Make sure you go to the bank. Make sure to go IRS first. Once you got the LLC, go to the IRS sites. Make sure you get the IEN number, and then after that, go to the bank. The bank, you created a bank account for your business name. So you have a bank account for the business specifically, and the lender will lend based on the business company. And in order to give you the money, in order to draw the money to fix up the house, they will send the money to that business account that you're gonna send it, because they will ask for a check, void check that you're gonna get from the bank, and that check obviously will have account number, routing number, and the business name. So every time, whenever they send the money to do the renovation, they'll send it direct to that account that you give it to them with that void check. So you have to make sure you have that beforehand. So these are some things that you need to do before you even get a deal. Make sure you have the business ready to go, bank account ready to go. So whenever you get a deal, all these things are easier to do, right? So I'm telling all of this because this is what I went through, and this is based on my experience that I went through as well. So make sure you do that. And then once you got all your scope of work in, everything is good to go. Usually the lender will just get back to you, says, hey, we're good, everything is good to close, and then we're gonna go obviously close on the deal, right? After that, you need some money to start the renovation. They won't give you the money to start renovation right ahead. No. It doesn't work like that. You need some money to, especially most of the time, they want you to have enough money to start at least the demo part before anything else, before they give you any money. So what you will do is get some money to start the demo. Let's say start doing some other work in there, and then after that, they're going to reimburse you the money. That's what will happen. So once you finish the demo, you're going to obviously reach out to them. It's a very easy process. Reach out to them, send them an email like, hey, I'm done with the first part, I'm done with the demo, and I need to get the money reimbursed, okay? You just got to make sure you get an invoice from your contractor. They need to give you an invoice, because the lender will ask for it before they reimburse you for the money. They ask for it, and sometimes they'll ask you for release of I think waive of liens, because they don't want the contractor to put lien on the property if you have paid them already. Like, that doesn't make any sense. So they're going to ask for that as well. So make sure you get those two things. A lien waive, they're gonna sign, your contractor gonna sign saying that they got paid and everything's good to go, and they're gonna give an invoice too. Make sure they get that as well. They're gonna give an invoice. Once you send them the invoice and everything is good, they're gonna reimburse you the money. The money will go to that bank account that I told you to open. That's where the money will go. Now, the monthly payment as well. Usually, let's say you close the deal today. Let's say it's January 1st, right? You're gonna start making your payment February 1st. That's where you go. So next month, that's when you start making your payments to the lender company. Usually, you don't have to go and set up anything like the way you do let's say with the credit card company, anything like that. No, usually what happens is the 1st of February, the lender will just go take out the money from that business bank account. So make sure you have money in that bank business account, because that's where they will take out the money. I'm telling you this based on my experience. That's where they'll take out the money, okay? Make sure you have money in that business bank account that before the 1st of that month that you know they will take out the money, because you will know whenever you go close on the property, they will give you a document, show you when will they start taking the money. So you will know, and make sure before that date you have money in there so they can take out the money, their monthly interest. Make sure you do that, okay? Make sure you do that. And then after that, you start fixing up the house. So you're gonna go through different phases to get the draw. The draw means to get reimbursed the money. So let's say you start the demo, you finish the demo, you get reimbursed the money. Now is you maybe pending the house. Once you finish pending the house, you're gonna go back to them, do the same process. You get an invoice, get a lien of waiver, send to them, they give you the money again. Let's say now, okay, it's a flooring time, you do the same thing. Kitchen is the same thing, bathroom is the same thing. It's different. I don't know, it's different for everyone, like at what level you're gonna go get reimbursed of the money, right? But another thing you have to know is every single time they reimburse you the money, they will charge you fees. There's a couple $100 fees they're gonna charge you. You just have to know that as well. So the more you go request to get draws, the more fees you're gonna pay every single time. All right, guys, I was editing the video and I forgot that I didn't mention this, but I think it's important for you to know. Okay, so the fees they're gonna charge you, right? It's not the fees that they will take. They're not gonna take those fees. Okay, those fees will be paid by you, but those fees will be paid to inspectors. Okay, what happens is the process, the way it works is you're gonna file your request for draw to get reimbursed your money. They will get their own inspector. The inspector will reach out to you. You're gonna schedule a walkthrough. They're gonna come to walk through the property and make sure what you told them you fixed is fixed. Let's say perhaps you say, hey,
I already fixed the floor and I need to get paid. Okay, that's fine. They're gonna send an inspector to come check out the flooring if you was done for sure, or you're not, or you're just lying, right? If everything is good, then then the inspector will send back the report to them. After that, they will get back to you. They're gonna pay you money. But this is how it works, though. The way that they charge you those fees, this is how it works. You're not gonna pay them the fees like take out of your pocket and pay them. No. Let me give you an example. Let's say you did the flooring. The flooring, let me just do a simple math. The flooring costs you $1,000 to do labor and material. You go file to get reimbursed $1,000. Okay. The inspector come through, everything is good. It's about time for you to get paid. And let's say the fees to pay that inspector is $200. You're gonna get reimbursed $800, not $1,000. The $200 will go to the inspector. Hopefully that makes sense. Hopefully that explain that makes sense. Okay. All right. Let's get back to the video.
So for me, what I would suggest to you is, let's say I would say do the paint, the flooring, do the paint, kitchen, and the bathrooms, and then go request a draw. After that, maybe finish it up now. You can finish up the maybe the roof and then the flooring, right? Just take it maybe like 2 or 3 draw. That's it. Don't get too much draw. And also there's a maximum draw that you can do. So you have to be careful that you have to ask your lender how much, like what's the maximum draws you can do to get reimbursed your money. So that's another thing too. Now let's say you finish up, fixed up the house. It's time to put on the market. Obviously put on the market, and then go hopefully get a client. They're gonna close on it. You pay the lender their money. You get your profit, and you move on. Life goes on, right? So that's the basic of what it is. But another thing that I want to remind you, they'll ask you to get an insurance. Okay, it won't be your normal like homeowner insurance. No, it's a construction insurance. It's a little bit more expensive than your average homeowner insurance. So you have to know that too. So you need to have connection with some people who give construction insurance. You'll need that. And they will usually, whenever they charge you for the whole year. So let's say you only use 6 months of the whole year. Once you close, you go back to the insurance guy that you talk to, tell them, hey, we close on the deal. They will reimburse you back the money for the other 6 months. That's how it usually works. So hopefully this video makes sense to you, and hopefully you got some insight on what's really going back behind the scene, what's really needed behind the scene. I'm telling you, and I've told you this because I went through all of this. What I'm saying, I went through all of this stuff, so I understand what it is. And if you need more videos or you have more questions or you try to understand a little bit more stuff, please comment down below. Make sure you subscribe to the channel. If you like the video, you enjoy, you find some insight or anything that was helpful, please like the video. Make sure you like the video, and if you need to share the video to some other people so we can continue to build this community where we can help each other out. I'm a newbie like anybody. I'm just starting this journey myself, and I'm trying to provide as much value as I can to you guys as I'm learning as well. So hopefully this video is helpful. See you in the next video. Peace.